First off, I'd like to thank all the Orbitz executives for being here today, and Mr. Brandt. My name is Alex, and with me here I have Taylor and Lance. And today we are going to provide you with a recommendation that does two things. Number one, we are certain that this recommendation will provide long-term prosperity not only to your organization, but to your clients as well. And number two, we wanted to make sure that the recommendation that we provide adheres to the investment philosophies that got you guys where you are today. Now, getting right into the Orbitz market expansion, we want to create an Orbitz branch in Japan by going with a greenfield investment, establish the licensing and capital requirements, as well as bring the two funds over, the Global Balanced Fund and the Global Equity Fund, and create a new Global Income Fund that will specifically cater to certain demographics within Japan. But Taylor will get into that in more detail in just a little bit. Now behind me you can see the agenda that we have laid out today. We'll begin with the situation identification. Next, I'd like to take you through the analysis, both internal and external. Then Taylor is going to go ahead with the decision criteria and the alternatives that we have laid out for your organization. And finally, get into exactly what you want to hear, which is the bulk of the recommendation. Then he'll hand it off to Lance, who will go through the implementation plan in both the short, medium, and long-term time horizons, as well as take you through some of the risks that will be inherent within going with a greenfield investment within Japan. And lastly, follow up with some of the mitigation techniques that you will be able to utilize. Finally, we'll go through a conclusion that will just reiterate everything that we will provide to you today. Getting right into the situation analysis, your organization found yourself caught between three alternatives. Do you go with a greenfield investment? Do you acquire an existing securities firm within Japan? Or do you exercise your decision to wait and see how the markets will play out? Well, we believe that the greenfield investment is the best strategic direction to go, and we'll get into a little bit more detail as to why that is later on. Moving into the internal analysis, we can see your company has some definite strengths that will play to your advantage. Now, as you can see at the top, the long-term orientation of Orbitz, coupled with their fundamental nature of investing, is going to play extremely well within the high-context culture that Japan has created and developed for themselves. We know that Japanese investors and Japanese consumers are very long-term oriented in the way that they like to invest and in the way that they like to handle business. Second, here we see the transparency and accountability of the fee structure is definitely a huge boon for your organization, because in the midst of a lot of people being upset with the way that fee structures work for asset managers, we know that the way that you only get paid through performance is going to play very well within the market. Next, we see the strong international experience that your organization already has is going to prove to be very useful and very helpful in entering into Japan, being already in a plethora of other countries, as well as the ease of accessibility for individual investors. Now, in the information you provided to us, you mentioned that it is very, very minimal, or there is a very minimal requirement for investment when you are actually going to put money into one of the funds that Orbitz has. And we know that this is going to play very well within the retail investment market, because even if somebody has a little bit of residual income, they can still invest with Orbitz and they can still expect some returns that are going to be favorable. Moving into some of the weaknesses that will be inherent within the structure, we see that the individual investor performance accountability is something that might not integrate that well with Japanese culture. We know that they are quite collectivist in nature and might not like to be evaluated performance-wise based on individual or based on the individual running each decision. Next, we see the online-based structure of activity. We know Orbitz wanted to have the online, or they wanted to create this using an online platform, but we know that within Japanese culture, meetings are especially important, and that would be physical meetings and real meetups instead of just doing everything online. Lastly, there is currently no current visibility within the Japanese investment market for Orbitz. This is new for your organization and you haven't entered in yet, so there's not going to be a lot of people knowing exactly who you are and what you do before you begin to market and show your investment activities. Going into the external analysis here, we see the opportunities at the top, beginning with the introduction of the NISA at a very unique time, as approximately a little over 38% of Japan is comprised of people aged 25 to 54. And this is a really good time for the introduction of the NISA, which is similar to an RRSP, for those of you who have not heard of the NISA. So it is an investment vehicle that allows you to save and encourages you to save for the long term. And this is especially important to consider when looking at the demographics that Japan is currently working with, because there is going to be a lot of investors who want to save for the long term, and now they have the vehicle that they can utilize. We see there is resumed growth in assets under management within Japan as well. So within the retail investment market, there is currently approximately 1.5 trillion yen, and of that, 22% is actually being managed by asset managers. And this is actually growing as well. Since the financial crisis in 2008, it's now gone above that and is continuing to grow, which is quite great and quite a good opportunity. Next, we see, of course, Japan being a first world country with a relatively strong GDP. There is going to be residual income from a lot of individuals within Japan. And like I mentioned earlier, even if they just have a small little bit to invest later on, they can still do it with Orbitz and with one of the 3 funds that you will be using, which is a very good opportunity for anyone who even just wants to save a little bit using the NISA or any other vehicle that they might enjoy. Next, as an opportunity, we saw Japan's aging population. So a lot of people are going to see this as not such a good thing, but we disagree, and we think that it is actually quite a good opportunity for Orbitz, and that's why we wanted to create the new Global Income Fund, which is going to focus on distributing periodic income to the population in Japan that is over 65. And I believe this number is a little bit over 25% of their population. And Taylor's going to take you through that a little bit later and get into the details of how that will work. Next, we see the challenges here. So relationship building and strategic networking. You are currently not involved in Japan right now, so you're going to have to go there, and while you're waiting for your license to get approval, you will have to start building those connections, building the network, and start trying to acquire clients or potential clients that you may be able to attract later on. Next, we see there is a saturated investment market. So regular members of JDSA, there are about 250 right now. So there are quite a bit of companies that are dealing with sort of the same thing, but we believe Orbitz is differentiated and they will be able to stand out once they have their foundation, which is exactly why we decided to go with a greenfield investment for your organization instead of just acquiring a firm that is already set up. Last, again, we see you must become a regular member of the JDSA. Now, they are very strict, and it will be a challenge, and it will take approximately 1 year. But with all of your organization's international experience, we believe that it will not be too much of a burden for you to go through with. Next, I'd like to hand it off to Taylor, who's going to take you guys through a little bit of the decision criteria and the alternatives that we've generated.
Thank you, Alex. So with this decision criteria, we also like to call them the keys to success. We use these to evaluate our alternatives, and if we are able to hit all of these keys to success, then we can come out with our recommendation. With this first decision criteria, or key to success, we want to look to see that it provides an opportunity. There is this opportunity, as Alex has stated, of entering this Japanese market, and we want to capitalize on that. The next point is cultural integration. By going into Japan again, you are able to diversify your company more culturally, and this is going to benefit how your organization is perceived throughout the world. Next, we want to maintain your corporate image. It's very important that you do this. Your firm was built this way, and there's no reason to stray away from who Orbitz is and why we would get away from that. So much as so, our last decision criteria is one of your organizational philosophies, accountability. Orbit prides itself on being the firm they are. They take accountability for their actions, and everything they do, they own up to it. So there's no reason to stray away from this, go the easy path. Orbitz does like to take risks, and we want to maintain that. So the first alternative A, exercise your decision to wait. With the way the world economy has been going, it might be a good idea or easier to just wait until markets pick up again. But again, this goes against who Orbitz is, and it forgoes that opportunity within Japan. As well as there is the loss of expansion. Orbitz is a big firm, but it's always better to become bigger, so we want to make sure that we are looking towards that. Alternative B is purchase Target Securities Co. With the pros of these, it is a well-established company. It had growth over the last year, good income, really good company to consider buying. As well, it does incorporate that international expansion, which waiting does not. For cons, it is costly. I'll get into the financials in a few minutes here, but it is extremely costly, and we do not want to have to pay more than we have to. As well as Alex talked about, there is that licensing agreement that we have to set up, and this can be a timely process. And then through this, the retention of employees and clients could be a challenge. As Alex stated earlier, there is that big culture shock that could come in the Japanese market, and these stakeholders could shame or not like how this has impacted the firm. And then alternative C is the greenfield investment. With this investment, there is the large growth potential. It does offer that international expansion as well, and it creates trusts through those people in Japan. By becoming your own company right out the gate, Japanese clients and employees will come to you. Orbitz is the firm that can do this, and they will bring that human capital and those clients to them because we know that they can exceed at this. But obviously there is a huge risk with starting your own firm, especially in a new marketplace. But even still, investing in a well-established firm, the beta of Target Securities Co. is 2.5, which is extremely volatile still, and we like to take that into consideration. And then as well, the last point, there is the licensing agreement that we still need to consider. If we look at our decision matrix, we can see that alternative C is our obvious choice. With waiting, the only thing you can do is maintain that corporate image of the company that you want to be, but it does lack accountability. By waiting, Orbitz is foregoing that philosophy that they need to take action into their own hands. With alternative B, it does hit on a couple, but alternative C, you get to add those corporate images, that accountability, that's going to make this alternative the best choice for you moving forward. And I will get into the financials now to show you why that is the case. Oh, sorry, the recommendation, again, to reiterate alternative C, is create the Orbitz branch in Japan, as well as incorporate that new investment fund because there is that aging population in Japan. And with this global income fund, we will look at wanting to invest in global companies that provide steady streams of dividends that are well established, that do not have the chances of folding under this economy, as well as we could invest in bonds that do provide that steady stream of income so that clients do have that low risk investment option and can secure their principal. And now here's how we evaluated the options. With the WACC there under 5%, this is the WACC of Target Securities Co. It is very low and very good. Rate of equity was calculated using a manipulated formula of the Gordon's dividend growth model. and we were able to establish the rate of equity from that. With the rate of debt, we used interest expense over net debt, and then value of debt, value of equity are straightforward from the balance sheet. The beta we incorporated into there. With the growth rate, we used 2.2%, which was what the stock rose over the past year. And we thought that was a reasonable growth rate for this stuff. And then we were able to create some pro forma financial statements. And with these statements, we were able to generate projected income. And so we took the present values and came with a net present value of about 150 million Canadian. And this is very, very close to what the value of the company would be if we took the current stock price of Target Security Co. times it by the number of shares, 45,000, and we'd get about 10 billion in yen, which is close to the 14 billion point in Target. And then this isn't even accounting for the premium that has to be paid, so it is a pricey option. And then this is the generalized cost. We didn't have a lot of notes at our disposal. We would love to go into more detail if we can, but you can see that if we want to open up a new branch within Japan, it will cost upwards of 6 million, with the main bulk being these miscellaneous costs, which would be contracting work, making sure everything is in legal order, and making sure those legal documents are in Japanese. And now I will hand it off to Lance, who will talk about the implementation.
Thanks, Taylor. So my colleagues went over this awesome recommendation, so how are we going to implement it? Well, first off, this is a big human resources concern here. We want to get the right individuals to work at our new Japanese firm that will allow those connections to be established with clients and develop that prosperity in the future. So first step is to begin an internal search within Orbitz globally for strong candidates that could be relocated to Japan to assist in just general Orbitz management experience and ground them in Orbitz's philosophy. Along with that, you begin the hiring process for Japanese candidates. So you would have to, this is part of those consulting fees Taylor went over, you'd have to hire a human resources professional of some sort to to move to Japan in the short term and begin searching for these candidates. Because they're a high context culture, it's important to get this face-to-face interaction to really get a sense of what these candidates are like and if they would be a good fit for Orbitz moving forward. Once these two steps have begun, you can approach the Japanese Securities Dealer Association and begin that accreditation. That's one of their requirements, that you have these certified employees moving forward. So you'll begin that deal in the short term. That takes roughly a year, so you want to get on that as soon as possible, and then create a short-term office that human resource professional can work at. Moving into the medium term, search for a long-term office location that will allow you to reach all these new clients and reach this new Japanese market. You want to develop this Orbitz income fund. That was part of our recommendation that would allow for that income growth for those older Japanese individuals. So again, less risky securities that maintain the principal and pay out dividends for those low tax individuals. You want to implement like a corporate culture alignment strategy. So with this mixing of different cultures, you wanted to try to assimilate them as best as possible. So having people work together in teams, you don't want to separate Japanese and non-Japanese people. So you want to work together so that corporate culture is established and can be used as a strength moving forward, merging those two cultures. And again, interlace the work environment. You want to monitor the long-term performance of your fund. Overall, it's a general strategy. See how you're doing in your new market and go from there. You want to maintain your strong connections and provide professional development opportunities. If one of your staff wants to learn Japanese or a Japanese staff wants to learn English, provide them development opportunities there. And just evaluate your business on a long term. Moving into some risks, exchange rate risk is always relevant when moving into a new market. You have a ton of options available there for hedging risk. If Orbitz Japan fails after these considerations, which we don't think it will, you can just move forward from there. And then a couple other risks and mitigations there. In conclusion, though, we think Orbitz will provide long-term prosperity for you. Thanks. We'd like to now open the floor to any questions.
On your cost to start entry, show $5 million in miscellaneous fees. Could you break that down a little further for us? That's 81% of your what you shared with us of your cost. That's a big number to be banned as miscellaneous. How did you
again,
up to be miscellaneous?
it is a very generalized cost, but we were looking at mainly comparing this cost to purchasing target. And we want to make sure there is a generalized conservative estimate to this value. And this value is just gonna, like we stated before, be contracting workers, making sure all the legal documents are required, getting that licensing agreement, finding those individuals that are regulated to deal these types of securities, and everything in between. Again, generalized, but it is to be conservative in comparing to the target purchase.
Yeah, it's the things like those human resource professionals that would go about the initial hiring process, the short-term office, and then that long-term office too. So it's just a variety of costs all lumped together just to give us a base that we can compare to acquiring that target from.
I have some questions about your NPV analysis. Just to confirm, does that relate to your greenfield investment? What you think they're going to return?
It relates to what the value of target securities co is and how much we would need to purchase them for.
So, just a question, did you not consider the PE multiples that were provided to you? Because that would have yielded quite a different upfront cost for target. Or did you discount those?
We didn't feel like we should include the PE ratio. It's such a, again, generalized evaluation method, and since we had the balance sheet and income statement at our disposal, we thought it would be better going the route that we did.
So the fund's track record is a very important part of the saleability. And with the introduction of the income fund, do you think the timing would be better off to wait until you build more of a brand before introducing a new fund?
We thought it would be good to incorporate the income fund right when we get into the Japanese market, specifically to also have something to advertise that is new and differentiated as opposed to what they were doing in other markets. And we also thought it was a good time as well, seeing the demographics distribution that we were given. We thought it would be a good opportunity to capitalize on, seeing as so much of the population is getting into that older age and retirement phase. We think there would be a good market to try and acquire some new potential clients and some new investors by giving them that opportunity.
Is your recommendation with the new fund? So if it's the approach to only launch 2 funds, is it a no?
It could be. I mean, ultimately, it would be up to Orbitz and all of your executives. But in our recommendation, we felt that we wanted to bring something differentiated to the table while simultaneously giving you that greenfield investment recommendation. So if you did want to move forward with just the 2 funds, that's definitely accessible, and it's definitely something you could go ahead with. We just thought we would provide something as well that could be new and be able to attract those new clients and those people entering into that phase of life.
Did you consider how long it may take to recoup the investment in the greenfield operation, or was it go ahead with that already?
We did consider it, but seeing as, again, comparing it to purchasing a firm, it would be, a minuscule cost. With how much debt Orbitz does have, we were able to consider that it wouldn't be that hard to pay back this initial injection of capital, especially with how well of a firm they are. They are able to, on average, generate returns, and we saw that in the UK market. And by doing this, they're obviously going to make more money from their fee tactics, and we believe that we will be able to recuperate these costs fairly quick.
So I'll ask another question then related to timing. You gave some generalized implementation, short, medium, longer term. How quickly do you see the short-term recommendations being completed?
Short term would be within 6 months. So again, part of the requirement for filing with Net Securities, Japan Securities Commission there, you need to have those individuals hired first, or a contract established before you can actually go ahead and begin that application process. So it's less than 6 months ideally, because that application process takes roughly a year.
Right, that's all we